Hello friends, a very warm welcome to my channel. In today's video, we are going to talk about a defense company called Paras Defense. So the defense sector has again come into the limelight post the Indo-Pak tensions and Operation Sindoor. And one specific thing that you have to observe in the modern warfare which is happening whether in Europe or between India and Pakistan is that there is a lot of use of unmanned aerial aircrafts, drones, missiles. So the usage of these kind of machines has drastically increased, and the countries prefer to send a drone or fire a missile rather than sending an aircraft with a pilot. Within the defense theme, what I foresee is going forward in the future, the companies which are focusing on manufacturing either components or the entire products related to these particular arms and ammunitions will do better than the other traditional defense companies in the longer run. And for this, the companies have to be tech oriented, they have to develop indigenous technologies, or they have to do tie ups with foreign companies and be ahead of the curve. So one such company is Paras Defense. It's going to be a very interesting discussion. Before we move forward, if you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Here is a small disclaimer. You can pause the video and read this through. This will be the flow of our discussion. We'll discuss the business model of Paras Defense in brief. We'll look at the stock performance in the last 5 years. We'll see the financial performance of the company in the last 5 years. We'll understand why the stock has given such a sharp rally in the recent times post the Q4 numbers. We'll understand the outlook of the management going forward. We'll understand the risks, valuations, and then form an overall view on the stock. So Paras Defense primarily is into two broad categories. One is the optics and optronic systems, and the second one is the defense engineering space. And both of these segments more or less contribute similar 50% to their overall revenue. But going forward, the company wants to focus more on the optics front because that is a higher margin. The company focuses on manufacturing, designing, developing all the product range within India as a Make in India initiative. However, for certain technologies, they have technology tie-ups with companies based in Israel and other countries. They manufacture highly critical components like rockets and missile programs, electronic warfares, drones technologies, etc. Recently, they have done an MOU with an Israel-based company called Heaven Drones, and they have set up a joint venture in India. Paras Defense will hold 51% of this joint venture, and they will manufacture hydrogen powered drones in India, which will be helpful in defense as well as civil. For certain products, Paras Defense is the sole supplier in India as well, like imaging components for the space technology. So this JV is called Paras Heaven Drones India. 50% is held by Paras Defense. They'll be approximate $1 million invested initially. They will be manufacturing hydrogen powered drones which can carry weights up to 40 kgs and travel up to 12 hours in a single charge. So this will drastically increase the use cases in defense as well as various other sectors like agriculture, etc., surveillance. These are certain products which the company manufactures. As you can see from the photos itself, these are highly technical products and the company is in a niche segment. On a consolidated basis in FY25, defense engineering contributed about 52% of the revenue of the company and optics contributed about 48%. Going forward in the longer run, company is focusing on increasing the share of optics to up to 60%. These are the various subsidiaries of the company: Paras Anti-Drones, Paras Aerospace, Opel Technologies, and the others. The company has both government customers, private customers, as well as international customers. Here are some of the largest PSU companies which are customers of this company. In the private segment, we have companies like L&T Solar Industries, Premier Explosives, the Tata Group as their customers. Internationally, we have Rafale, Israel Aerospace Industries, and various reputed names. So this has been the stock performance. They came out with an IPO in 2021 with an IPO price of about 175 rupees. And from then onwards, if somebody is holding the IPO shares and has been lucky in getting in the allotment, he has got a 10 bagger in hand. So the stock listed at a very good listing price of about 4 to 500 and then cooled off a bit and remained in the range bound manner for a very long time. So these kind of corrections in this chart have been happening because the valuations of the stock are very expensive. So whenever there is a rally, there is profit booking from the top. And recently, post the Q4 numbers, the stock has made a fresh rally and made a fresh all-time high of about 1800. In the last 5 years, the company has done revenue from 143 crores in FY21 to almost 365 crores in FY25. So the revenue growth in the last 5 years has been in the range of about 20 to 30% CAGR. But going forward, the company is highly optimistic of generating higher revenue growth. EBITDA has been quite stagnant in the last 4 years, except in FY25, which has shot up to 97 crores. This can be understood by this margin trend In FY21, the company did an EBITDA margin of 31%, which gradually reduced to 21% in FY24. And now in FY25, we see an improvement to 27%. And going forward, the company is positive that these margins will either be maintained or improved. The company has announced a stock split of face value 10 to face value 5 shares. The return ratios are not that attractive, about 15% ROC and 11% ROE. It's a high working capital business. The company needs to definitely improve the way they are managing their working capital. So they have very high inventory days and debtor days. The cash flows are not at all impressive. In the last 5 years, the company has not generated any free cash flow because it is in the growth stage. That could be one justification. But the operating cash flows have also been just 60 crores in the last 5 years. And because of this working capital management, because of the lack of cash flows for growth, the company has raised funds in the form of QIP at 1035 rupees, totaling to almost 134 crores. And if this is a way they are going to manage their working capital going forward also, then for further growth, they may have to raise the funds again. Now, what led to the sharp rally in the recent times? The Q4 FY25 performance has been robust. They saw a massive jump in profits, which led to this rally. They've announced this JV with Heaven Drones, which is a right JV at the right time because the entire country is focusing on this sector right now. The geopolitical tensions across the globe, as well as between India and Pakistan, has brought this sector into the limelight. And people are hopeful that the government spend in this sector will drastically increase post this increase of these tensions. And the markets have also been good in the last 1 month or so. Before we move forward, if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. More than 7,000 people are in touch with me daily through my Telegram channel where I share the market view in the morning before the market opens. And I also share different portfolio allocation strategies which will help you improve your return. Talking about the growth outlook, the management guides growth of 40% in their top line in FY26, which is quite impressive. They have an order book of somewhere around 900 crores right now, and they are hopeful that they'll cross an order book of 1,000 crores in the near term. And in the next 2-3 years, they may cross an order book of about 2,500 crores. So there's a very big plan in their mind. They want to spend about 12,000 crores in developing optics park in Maharashtra. So this is going to be a game-changing venture if they succeed in doing this, because the size of investment which they are talking about is very large compared to the size of the company right now. Of course, they would not be able to do the entire investment themselves. They will take the help of the government and also some other private entities. They may do some joint ventures or take some government subsidies to fund this venture. But if they succeed in doing this, it would be game-changing for this company. When you look at the order book front, about 40% of the order book is from defense and about 60% from the optics right now. This is what the company is aiming for. And when you look at the size of the opportunity which the company is targeting, in the laser systems, they have an opportunity size of about 3,000 crores. In optical telescopes, they have an opportunity size of about 3,000 crores more. In the existing business, what they are doing, they have about 2,000 crores of opportunity size. And you see that TAM is increasing as they do more tie-ups, as they develop new products. Their target market size is increasing. And in the optical systems, they have a size of about 6,000 crores which they can target. So the size of opportunity for this company is growing every year. Recently, they've done another MOU with an Israel-based company called Microcon. With this tie-up, they will be developing drone cameras in India. So these are not some very simple cameras. They are priced between 20 to 40 lakhs. So you can understand what is the precision, what is the capabilities of these cameras. If they are made in India, the cost is lesser and they'll be used to supply to customers in India as well as export to other countries as well. Now talking about their valuation, the stock trades is about price to earning multiple of 118x, price to book about 11x. Market cap to sales of 20x and EV to EBITDA of about 68x. So the re-rating in the valuations is already over. I don't expect much expansion in the valuation multiples going forward. And for a value investor, these valuations are not cheap. But you also have to look at it from a growth perspective. What are the risks of investing in this company? There could be regulatory risk. Every decision taken by the Indian government will impact, in the defense sector, will impact this company. There is a lot of business which comes from the government sector. So government's capex in the defense will impact the business of this company. They are talking about several growth plans, several joint ventures, but there is an execution risk as to how well they execute it. Working capital has to be efficiently managed going forward. If they do it in the same way, then they will always need funds to grow. They have to be updated in latest technologies because they are manufacturing tech-led products. They are doing several joint ventures. So for joint ventures to succeed, both the companies have to work well together. Looking at the growth plans which the company is targeting, I feel that the company may raise further funds going forward and the valuations are not cheap. So now that you've understood the business of RS Defense, the growth plans, the valuations, the financials, what is an overall view on the stock? If you're already holding the stock, you can continue to hold. because they are giving a growth guidance of 40% for the next year. And they're also talking about further increase in the order book and the target market size. So if you're an aggressive investor and you're already invested, you can continue to hold. And when you're looking at a fresh entry in the stock, it depends on what kind of an investor you are. If you're a pure value investor looking at buying companies at cheap valuations, then the valuations of this company are not cheap. But if you're a growth investor, ready and willing to pay higher valuations, if there's growth in the company, if the sector is in limelight, then you can consider investing in companies like Paras. But make sure that you don't go and sit at the top. You have to give it some time, wait for some correction, and then gradually accumulate the stock in your portfolio. But don't forget to monitor how well they manage their working capital and how well their order book is growing in the future. Those will be your key monitorables going forward. So that's about Paras Defense. I hope you like the crisp video. If you like it, hit the like button and subscribe to the channel. If you want me to make more videos on your favorite stocks, do mention the names in the comment section. Don't forget to join our Telegram channel using the link in the description button. Thank you for watching and have a wonderful day.